All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on 12/4/2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, let's go ahead and jump right in. So not much really happening over the weekend. Just kind of going sideways on these crypto markets. But let's take a look at what happened on Friday. And then we're going to take a look at our weekly timeframes as well. Look how that weekly close is reflecting. And then try to get an idea what we can expect going out into the end of year and rest of December. Obviously, we're seeing some trends shifting or potentially, flipping. Those SR flips. So, what's that going to mean? What's going to be the next big trend? The next one that lasts for a year or 6 months or whatever. We want to make sure that we're positioned for that. So, taking a look at TNX, obviously we've seen yields come down. We did basically gap down here on Thursday pretty violently. Sold off after that. And then on Friday, we came all the way back up. Tried to close the gap. Didn't quite get there, but close enough. And then got completely rejected. Sold off back down. And obviously we know the key area that we were watching was that yellow support. So close below that is important. And obviously the next level after that we were targeting was the 382. So we're basically at the 382, slightly below it right now. Looks most likely to me once we take out that low that we go a little bit lower and then potentially back test to resistance. I would have rather seen a little more of a push up right here and a clear rejection. But that is a pretty clear rejection. Just not quite as high as we would have expected. But it seems likely now we're headed down to the 0.5, depending on how long it takes to get there, potentially the 618, in line with the 200s. And essentially all we're seeing here is, yields were holding up there for a while and sold off pretty aggressively. The dollar had moved down much quicker, much more aggressively. And now it's like the yields are just kind of catching up. But we know this whole entire time, dollar and yields have been trading together. Obviously, that's been putting pressure on the risk on assets, markets, whatever you want to call them. So that being said, we are now about 10 days roughly away from our next rate hike. So we know in 10 days we're going to get a 50 basis point hike, possibly still 75, maybe 25. But at this point in time, it's pretty much priced in 50 with very, very little probability of anything different. Now, that being said, we know exactly what happens from when the Fed speaks usually to when the actual rate hike occurs for like that week, 2 weeks, etc. We typically see weakness in the dollar and in yields. And then obviously once the actual hike happens or once we get to the event, that's when we see them jump back up. That's what we've seen basically the last couple times. So I'm expecting something like that. Now the question is over the next, 10 days or basically, a week of trading roughly, are we down at 0.5 by then? Are we down at 618 by then? Did we already bottom? I mean, who knows? I would say expect continuation. Anytime we have such a strong rejection and then we close a red candle, I would say expect continuation. So the real next level I'm looking at is 3.31. And then at that point in time, you have to worry about fundamentals and technicals kind of banging their heads on each other. Obviously, we have yield curve inversion across the board. But right now, the Fed is saying, hey, we're going to raise rates again. But, we're looking at the 10-year right now. And the 10-year is saying, well, actually, like, we're coming down. So the Fed is still going up. They might be slowing the pace of the rate hikes, but the rate is going higher. So again, we're seeing divergence between what the market is pricing in and what the Fed is actually saying. So the truth is right now, the most important thing to pay attention to is the Fed, obviously. But the real most important thing that trumps the Fed above all else is the markets. Because we do still kind of have free markets. So as long as we see the market saying, hey, the Fed is wrong, the Fed is a liar, or the Fed just doesn't know it yet, but they're about to be wrong. That's what the market's telling us. That's what yields are telling us. Also, jumping over to US oil, obviously we're still at the bottom of the range. We have this little sideways channel. As long as we're in this channel, I expect us to just continue oscillating inside of it. Eventually, maybe we break in one direction or the other. But for now, this is the clear trading range. We have multiple touches on top, multiple touches on bottom, and then obviously a heart line through the middle with some pretty clear interactions. So it seems likely now, based on our close at the 21 here, that we're coming up to test the heart line about 85. Potentially could get all the way back up to the top of the range, even to the 200 simple. But the truth is, this has confirmed into a bear market. And we know it confirmed into a bull market way back here, in basically the end of 2020. This was flipping into a bull market. Arguably, based on my method, obviously you can do it however you want, but we confirmed into a bull market on oil on December 2020. So that was 100% a bull market December 2020, and that's at roughly $45 oil. And then here we confirmed into the bear market essentially right here at $91. So 100% up. And, that was November 2022. So as far as I'm concerned right now, oil is risk off. Oil is risk off. So maybe we do come up here. Maybe we break down from here straight away. But as long as the charts are looking how they do, as long as the technicals are looking at how they do, this looks like a pretty clear rejection and at least temporary top on oil. Now, macro, I'm still very bullish on energy in general. But when we look at this on the weekly chart right here, it's like, how far can I go before? Okay, I'm going to stop right there. So if we look at this on the weekly chart right here, obviously we confirmed into a bull market on the weekly right around February 2021. So not long after, obviously, the 200 exponential crosses above the 200 simple here. And then now we're just back testing it. So we break above key resistance. We start to run. We come back and test it as support. So we initially bounce a 200 exponential. Maybe we come down and hit the 200 simple. But right now we're preparing to print bullish divergence. If we get another up week on the histogram right here, that's basically a low and then a lower low and then a low and a higher low. So we're essentially printing bullish divergence on both these on the weekly time frame as we're confirming into a bull market after an extended pullback. I mean, the truth is, we talk about this scenario right here all the time. This is it. This is the best place we could possibly enter into a trade with the most confidence. If we break above key resistance, start to confirm into a bull market, retest that resistance and it holds, that's it. It's off to the races. So whether we buy on the touch of the 200, whether we buy on the 200 simple, whether we buy when the 821 on the weekly crosses back bullish, crosses back green again, whether we buy off of, the bullish divergence and just try to pick the bottom regardless, any of those are potential opportunities. But the truth is, we're setting up for a massive long-term bull market in oil. Now that is all based on predicated, contingency of that is all holding the 200 exponential and simple. If we break down below these and, they're basically flat right now and then they flip red, that's it. We were wrong. That's okay. We accept that we were wrong. Once we start closing below 65, on the weekly time frame or a couple weeks, whatever, once the slope line flips back over, that changes everything. And we're okay. That's it. We admit it. We were wrong. We're done. On to the next. But in the meantime, that's what I'm looking for. I'm looking for that as a buying opportunity. You could argue this was already a buying opportunity, especially, if we start printing this bullish divergence. And I like to see 2 green histograms for, like that second drive of divergence. But that's basically what we were talking about was, hey, this next one could potentially print green. And then if we get any kind of continuation at all, that's 2 weeks of green. That's confirmed bullish divergence. Now, the difference is, though, are we going to be at 87 by the time it happens? You miss out on the 10 waiting for the confidence game, or do you just take a stab at it right now? Obviously, that's up to you. None of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So keep in mind here that I am still very bullish on oil, but short term, I think we have downside. I think we have more downside risk than, upside reward short term. Now, medium term, I don't even think it's close. I think all the risk is to the upside. Like if you're not positioned in energy, over the next, whatever, 2, 5, 10, 20, 50 years, you miss the boat basically. So that being said, monthly oil, this is a pretty freaking clear top here. Bunch of green histograms in a row. We go absolutely parabolic. We see a rejection candle. We come back up. We can't get a higher wick up here. We do get higher closes. We printed different time frame, bearish divergence, hard sell coming out of the bullish control zone, all red histograms. I mean, there's no clear sign of a top. Now, the fact of the matter is, though, we came down to 200 simple. Did we come down lower to 200 exponential at 64 roughly on the monthly? I don't know. We'll have to wait and see. But, it looks pretty good right now. I mean, it looks pretty good. Now, where do we stop at? Does it matter if you buy at 81 or 72 or 65 if oil is going to go to, 150 or 200 or 1,000, whatever people are saying? No, of course not. It only matters for that little bit of time when you're underwater. But the truth is, the momentum now is back to the downside on our indicator oscillators, but we're still above the 200s. So it does look bullish long term, but it could get nasty, like I said. So again, it's essentially right now short, medium, long term, all kind of saying, hey, actually, this asset's probably a good investment long term, but there's going to be a little bit more pain ahead, likely. And then obviously, we know that this corresponds with, essentially, we haven't talked about it much lately, but, we always talk about the four horsemen. And obviously, the fourth horseman is energy prices spiking. And, this was 2008 energy prices spike right here. And then, of course, completely crater after that. And of course, that corresponds with the global financial crisis or, real estate bubble, etc. So that being said, if this is going to be a similar situation, maybe it doesn't get as nasty that oil prices don't crash as much, or at least, U.S. oil doesn't crash as much. Maybe it does. Maybe it comes down to 62, whatever. But the fact of the matter is, this time, it never went back to all-time highs. We haven't been to all-time highs since then. So, if you adjust oil prices for inflation, it's doing terrible. Terrible. If it's still lower than the price it was back in, 2008 or arguably 2007. So it's not crazy to think that if we just reach the previous all-time high on oil, which is around 140 bucks a barrel, if we just reach that and then we just adjust it for inflation over the past like 15 years or whatever, I mean, what is that? 200? Is that 250 for a barrel of oil? So in my opinion, it's not crazy to think that we could get up to those levels over time. Over time. So that is it for oil. Obviously looking like, basically the top, the peak, whatever you want to call it. And obviously that has corresponded in the past with these big market sell-off events, 2008 being the example. So next we have the VIX. So we had talked about this VIX and the potential for a bounce off this level and an invalidation, taking out the low right here. And that's exactly what we did. We closed a lower low on this. So we took out this previous low right here. So depending on how you want to look at this, we have another low right here that we're basically at or around. Here's our highest high. We put in a higher low right there. And then we put in a lower high. And now we put in a higher low. So we're kind of squeezing into this triangle. And now, a series of lower highs and a series of higher lows until now. And now we're breaking down. We took out that low. So if we take out this low now, I mean, there's still obviously some levels along the way, but, it looks like we're headed probably back down to like 15. What does that mean? It means the S&P probably is on its way to catch up to the Dow. So again, I'm not trying to get overly bullish right now. Obviously, this could be another fake out or whatever, but, I'm a momentum trader, have obviously a very, very clear, concise set of rules, plans, trading actions. The playbook tells us that, hey, actually, it's probably time to get bullish real soon, at least on some assets. So we don't have to look at the markets as, just this whole broad thing that we have to invest in. It's okay for us to pick the winners. And it doesn't mean we have to pick individual stocks. Right now, we could pick the Dow because the Dow is the winner. Right now, we could pick, a certain crypto because it's the winner. It's okay to start dabbling as long as we're not just like blindly spraying and praying like we do in a raging bull market. So that being said, the Dow Jones back on top of the 200 exponential and simple. 200 exponential is blue. It's above the 200 simple. The 200 simple is basically flat. It's very close to crossing back. Nowhere, well, I shouldn't say nowhere. Technically, we confirm into the bear market right here when both moving averages flip red and pink respectively, and then we move back above them. This is more of like the back test, the retest of resistance. The SR flip, it was support. Now it's acting as resistance, rejection. But since then, so arguably, we tried to reclaim the trend here, but since then we have been unable to do that. This last push up here, we got back above the 200 simple, but it never flipped. The 200 exponential did. Here, the 200 exponential flipped. We're well above the 200 simple. So, we're very close to having the same thing happen again or actually confirming into the bull market. And the truth is, we're so far above the 200s at this point in time, the Dow can literally sell off. I mean, heavy. It could sell off all the way back down here, like 5.5%, and it would still be, at or about to confirm into a bull market. Now, obviously, we're in the bullish control zone, and we're seeing divergence here and signs of short-term exhaustion. So two scenarios could play out. Three, I guess, technically. This could just keep raging and just go to new all-time highs. That's always a possibility. We could see a violent pullback back to key support and, cool off these indicator oscillators And then after that, raging bull market, new all-time highs. Or, this could just be a failed rally or a fake out or, short covering or, whatever you want to call it, coming into the end of the year, same as the energy trade was last year, basically. Everybody was dumping bonds and dumping stocks and turning around and buying energy. So this could be a similar type of scenario where everybody's dumping all the other shit that they don't want. And, they're buying the Dow Jones. And that can include people are dumping the Russell or tech or whatever. And they're giving up on these bullshit narratives that didn't work. And they're just saying, hey, you know what looks good right now? I'll buy that. So it seems like the most likely scenario to me is that we come back down here to about 32.5 or something like that. And then, we really find out what's going to happen. But at this point in time, I wouldn't rule out, just full on bullish exuberance. 7.3%, 7.37 up or, 5.68 down. So it's basically a coin toss right now. Are we going to retest the 200s or are we going to go to new all-time highs? And if we look at the longer time frame, you can't deny this is bullish. On the weekly, we have blue slope line now, all green histograms above the zero line, hard buy signal coming out of the neutral zone. Stoch's powerfully angled to the upside. 821 have crossed bullish once again above the 200 exponential and simple. Both are still blue. Took out that previous high right here. We got another one to get over here at about 34,860. And then after that, it's new all-time highs. Now, there is one thing I do want to look at while we're here. This little period in time right here. This was 2018. And we basically pulled this like triple top scenario right here with that heavy pullback. Okay, almost all the way back to the 200s. So we basically like double topped, massive sell-off, and then ran back up here. Now keep that in mind that we had a high and we put in a slightly higher high before that big sell-off here. And that was obviously with weekly bearish divergence, which is how I predicted that crash, obviously. It was pretty clear what was about to happen. To a couple of us at least. And then when we look at the monthly, go out here on the monthly, 821 have bull crossed again. Just giant green candle. It's not quite bullishly engulfing because it gapped up a slight bit, but it's all but bullish engulfing. This looks exactly like what happened, back here when the Fed stepped in. Fiscal and monetary policy got us out of this one. What got us out of this one? Fuck if I know. But hey, it is what it is. Stoch's starting to turn up here. Knife, pretty powerfully angled up here. It's just got to get through the pink stochastic. Multiple green histograms. The slope is still red, but we're coming back up here to test those. Is it possible we come up here, smash our head on the slope line, get rejected, put in a new all-time high, print bearish divergence on the monthly, and then after putting in a new all-time high, sell off? Scenarios like that have happened before, so it's worth paying attention to. It's worth paying attention to. A peak right here, a high, a higher high with the lower high print right here, followed by another higher high with the lower print right here. Triple bearish monthly divergence and a crash. Boom. Is that going to happen again right here? I don't know. Markets are sometimes completely unpredictable and sometimes they are completely predictable. I shook the 8 ball and it says seems likely. So, all right. So on to the S&P. So we want to pay attention to not so much what the S&P looks like because we've been over that plenty of times. We want to pay attention to right now what it looks like relative to the Dow Jones. And there are easier ways we could do this, but we don't need to get all fancy with it. But essentially, back testing the 200s, cross the 200, exponential is blue again, 200 simple still kind of sloped to the downside, very close to crossing back up on top of them. If we go sideways long enough, we confirm back into a bull run, bunch of green histograms, blue slope line, bullish control zone. Looks okay for now. Don't want to see it like printing bearish divergence if it starts to roll over or anything. But on the longer time frames, we basically came down here, printed bullish divergence off of the 200s. Pay attention to that because we're going to talk about the DXY later. A low, a lower low, a low, a higher low, shot back up here, retesting some of the previous levels. The 8 and 21 bull cross has taken place, so that is confirmed. Hard buy signal, bunch of green histograms crossed over the slope line. The slope is still red for now, and we are below the zero line. But this is what it looks like when you sell off back down to support. Everyone buys support because that's a good entry. and then you go back off to the races. Now, does it have to happen like that? No, but it seems very similar. So again, looking at that same period right here, so we have that initial high, then we have a higher high right here, crash down to the 200 exponential and simple, and then we have another higher high right here, and then we crash down to a lower low, that megaphone pattern basically. And then, obviously the rescue effort works, and we go absolutely parabolic after that. So let's switch over now to the monthly, and note again also, while we're discussing it, that we put in higher highs along the way with that. So now on the monthly right here, so just kind of zooming in a little bit, we have basically, now let's take a look at this. We have a high right here, then we have a lower high right here, then we have a third lower high right here again, and we have a high, higher high, higher high. So 3 drives once again of bearish divergence followed by the crash. And now we got that little mini crash in the middle of those 3 drives, and people thought, oh, that was a crash and that's it, and we're off to the races, new high, everybody's all in, and then the real crash hits. So what does that actually mean? Why did that happen? How did we see it coming using bearish divergence? Obviously, because we just went over that. Is it going to happen similar type situation right here? Obviously it's worth paying attention to. We don't want to go all in on some theory because it happened before, but we should be conscious of the potential something like that happening. Now, it doesn't seem nearly as likely to happen right here as as of now, just because we're still 17% off the highs. But maybe that's what the VIX is telling us. I mean, going back to the VIX is crashing right now. The S&P is lagging behind the Dow substantially. We've talked about the reasons why actually the weakness in the dollar and the weakness in stocks could bring a ton of foreign investment into the United States, especially as people are still afraid in a lot of places of 10, 20, 30% inflation, etc., crazy governments, whatever. So there's definitely a strong case actually that, that we do melt up to new highs again. I know people don't like hearing that stuff, but it seems like at least a possibility at this point in time. So if we start clearing some of these key resistances around 414, depending what you're looking at, we could be off to the races. We're about to cross the monthly 821 back to the upside. So, maybe we put in a new all-time high on the Dow. Maybe we put in a new all-time high on the S&P, and then we go down deeper. It's not crazy to think, similar to what Bitcoin did, where we come in, we put in the high, we come down, have a deep correction. Everybody's expecting a full-on crash. We come back up, put in a slightly higher high, and then the real pain hits. Not crazy to think that happens, because really what is happening right now is it's not a matter of are we going to go into recession, how do the numbers look, what's going to happen into the future. It's more about we all kind of know what's going to happen going into the future. It's more about timing and then figuring out how you're going to make money by timing those events. And the truth is, timing is the hardest part about trading. It's very easy to be oh, it's going to go up, oh, it's going to go down, oh, it's going to do nothing. But it's very hard to have a target and get the timing right. So now in the Qs, obviously substantially weaker, way below the 200 exponential and simple. Nothing crazy to talk about right here, obviously. But let's just jump over. So we see all these indexes having serious, clear signs. We just saw, as a matter of fact, there's a reason we have these visual aids. We see clear signs of, bullish divergence, at the bottoms on some of these assets here. So it's worth paying attention to. If we see bullish divergence and bearish divergence getting respected all the freaking time on daily, weekly, and monthly time frames, we should really pay a lot of attention to that. So again, here we see a low and we see a higher low, clear bullish divergence on these points. The corresponding move afterwards was pretty weak, but that doesn't mean that now this is just going to underperform forever. Matter of fact, there's other scenario where all of a sudden people are really bullish and realize they're under position in the Qs, and then this just takes off, or the S&P or the Russell or whatever it is. And so maybe the Dow underperforms everything else going forward. Those are all potential possibilities, but we won't know obviously until real time what's going to happen. So let's just jump out. So, back still on top of the 200s, we retested the 8 and 21. We're still a little ways away from a cross, but starting to build bullish momentum on these things. So, and then the monthly, we're still well below the 8 and 21. They are still bear cross. We do still have red slope, all red histograms. We're in the bearish control zone. So the Qs are still looking pretty bad, for now, obviously. Still looking pretty rough. While we're here, I should have went back and looked at the previous tops too. Well, we could put together a chart and make it easier. just comparing, because it's important to note that there was times in history, like in that long sideways period, back in like the 2000s, and then also after like the the global financial crisis, where like one index put in a new all-time high and other ones underperformed and didn't. So like we can look at the Russell, for instance. Here's a specific example of recently when we put in the low on the Russell and then we retested the low, but we didn't put in a lower low. And then that was corresponding with bullish divergence on the daily and then a rocket ship back up to the 200s. And then if we go over to the weekly here, again, we see we printed clear, lower low right here or same low, however you want to argue it. If you don't want to get into like the specifics, it's a tiny bit lower, but regardless, clear bullish divergence at the bottom corresponded in a nice bounce afterwards, reclaim of the 200 exponential and simple. But if we go back over here, this was that specific time period we have been looking at basically. And, this was the 2018 level. We come up here, we top, and then we sell off heavy. And then the pushback up here in 2020, we do not take out that previous high. So while the other, major indices were putting in new all-time highs, this was not. This was showing weakness. And then again, obviously melted down pretty heavy. But after that, once it took out this all-time high, it gapped basically up here after the COVID bailouts and essentially gapped through this previous high, through that previous high, and then it was literally just a melt up after that. So again, we're seeing, that weekly bullish divergence, blue slope line flipping, hard buy back on top of the 200s. 8 and 21 have bull cross back up here on the weekly. It's hard not to argue that this thing could have legs on it. The monthly is still below the 8 and 21 or bear crossed, at least for now. A couple green histograms, left the bearish control zone. Still a ways out for now. And then we obviously see, depending what happens right here, this was our previous low right here, and we came down slightly lower on the histogram. Even if it was the same, this was our previous low, with that previous crash, and then a substantially higher low, which is monthly bullish divergence potentially building right here. So, what does that tell us? Is that Russell about to like massively outperform and shoot up here to new all-time highs? I know right now people don't want to hear that the stock market might be going to new all-time highs and crypto might be getting left behind. But there's a strong case that that's actually what we're setting up for. So, and especially everybody's so sure that, oh, the US is doomed and, we're going into recession and the anarchy and the end of the world and everything's worth zero now. Maybe they're all fucking wrong. Usually when everybody agrees on something, like I'll just hypothetically take the other side of the argument, and a lot of times I'll be like, you know what, actually, like that might not be as unlikely as initially thought. So XLE is next, and that's where you make the real money, is being on the other side of the trade, not being with the pack. So XLE right here, so we put in that previous peak right there, we came all the way back up, slightly higher high, and now we're consolidating below the 8 and 21 now, very close to the bear cross. I'm not saying this thing is done, but it does look like it's coming back down here to start retesting some of the supports around like 83, 84, possibly somewhere around like 80, depending. But if it does continue to just hold up here and go sideways while the indicator oscillators cool off, could be setting up for higher prices. But I do think that it's getting ready to top out and come back down. So, okay, so just I've been toying around with this just a little bit more before I publish it. But we're looking at the TJD CPI, inflation, and essentially just putting a couple random assets up here, and like, we're not like breaking ground on any of this stuff, just kind of simplifying it. But I have gold up here in like the goldish orange color. I have silver in the like gray silver color. We have US oil in like that like light blue, and then the 10-year TNX. So it's the yield in purple. And what I'm looking at is when we had these big spikes in inflation, what happened to these assets? Did one of them lead the other? Could we pick the peak by looking at something and not by something else? We see here like silver and gold both peaked well ahead of inflation back in the 70s, in 70. And then we see here again, silver and gold. Now gold peaks and then comes up here again right around the same time. Silver peaks way before on that first push, and then actually like prints bearish divergence. We don't see like a strong correlation with US oil. It's basically just creeping up the whole time. And we don't see anything like super clear with TNX or anything in that specific time. Now here, when we look at this time in 1980, again, we see right when the slope flips from green to blue right here, silver has already topped and sold off heavy. And then gold had already topped and then, sold off a decent bit as well. We see US oil continue to kind of round out. It topped, but it didn't have like a crash or anything. It just kind of slowly went down after that. And then obviously on TNX here, we see a corresponding top in that. But then shortly afterwards, it goes to a new high. So again, we see the yields peak right here in 1980 at roughly like 12, 13%. And then not too long afterwards, it doesn't take long to correct. 1980 is the peak and 1980 May. So it was 1980 February and 1980 May. So February was the top, May was the bottom. And then after that, it wasn't long before we came up here and put in a new high again in 1981 at like 16%. So silver peaked before the yields did. Gold peaked before the yields did. Gold came back up. Silver didn't even get anywhere close to it and printed bearish divergence. Yields printed bearish divergence, hidden, and then peaks up here as the second push of inflation peaks up here and a rejection off the slope line, which is beautiful. That's the most reliable rejection we can get. And then just going on here and kind of looking a little more, obviously we see another spike of inflation back in the 90s. Most people don't remember that, but when you think back to it, you're like, oh, actually, yeah, I do remember the inflation was kind of crazy back then. And that was it wasn't crazy. It was 6.5%, but it was crazy enough. It's not 20% or whatever. Or CPI rather. But that being said, here we see the peak once again in US oil, and this is a spike top here in 90 that corresponds with the top, and we don't see like strong correlation with the other ones. And then this brings us basically to our most recent key periods in time, which is 2008. Obviously, we know that was obviously a big deal. So here in 2008, CPI peaks at exactly the same point basically as oil. Gold kind of sells off and then continues higher. Silver has a pretty aggressive sell-off. Again, silver peaks in advance once again. So silver is like a leading indicator. When silver peaks, we usually go lower afterwards. Inflation peaks and that's it. So silver is not bad for like leading inflation. And then obviously, pretty massive sell-off. Obviously, we see it corresponds in TNX as well. And then from that point in time, we see essentially a divergence kind of happen. Like back here when we peaked in the 1980s, gold continued higher and put in new all-time highs, obviously. Oil continued higher and put in new all-time highs. Silver continued higher, didn't actually put in new all-time highs, but took out like the 1980. Did it though? Yeah, it did. Okay, it came up to in 2011 at like 50. Yeah. So that was the 1980 high. That was 2011 50. So again, went on to put in. It's not technically all-time highs because I don't know why it might just not be translating on here, but this was like a 50 top as well. And then now we see yields though did the opposite. Yields just continued grinding lower. And obviously this was the financial engineering of the Federal Reserve trash piece of shit institution, that basically just trended rates towards zero. So even though we still see the correlation holding up as they're peaking and troughing, as we see the correlation holding up, instead of continuing to just slowly grind higher, they, basically trended to zero. And then, obviously that was zero itself. And then again, we see, the trough happens in the TNX, and now TNX and inflation are clearly, very, very correlated. We see the same correlation in oil as well. And then we see like, silver kind of spikes and then just kind of melts down afterwards. So again, silver spikes, so quick and then just goes down the whole rest of the time while inflation and rates are going up. Gold, same exact thing. So what are they telling us? Somebody's lying here. We're seeing clear signs that, okay, every time inflation peaks, at least temporarily, gold and silver peak as well. So in my opinion, and we could be definitely wrong on this, but in my opinion, if we're going to trust the actual data we have, which is all we have, and we're going to do legitimate actual technical analysis based on, what we have, which is the data, If inflation has peaked right here, and just because we peaked doesn't mean we don't go on to put in a higher peak over the next 6 months, year, 2 years, whatever. But let's just say this peak is in, which it clearly looks like it is. Gold and silver should not go higher, at least not like short to medium term. They should actually go like much lower soon. And same with energy. Energy is telling us that's likely to happen. We're seeing a little strength lately in gold and silver, but again, still very bearish, like longer term charts. And then, obviously yields potentially peaking as well, starting to show like, hey, that might be it. So, I trust the data we have right here. I trust what we're seeing. Now, does it have to play out like that exactly how it did in the past? It does not. But I like what we got. So now on to DXY. So DXY came all the way down to 200s, which was our target zone. So we have overshot that for now. What we're paying attention to is the potential that this could possibly print a third drive of bullish divergence. Now the histogram is very close to taking out that previous level. So, maybe this was just an internal move and we're going to pay attention to this histogram compared to that one. I would prefer a clear sign of, this rolls over like immediately and starts going back up. That's what I like, is clean bullish divergence. Now, if we don't get that, if we take out this low, put in a lower histogram right here, but don't take out this low, and then obviously we have a lower low on price action, it's still bullish divergence, but it's not going to be as clean. So that's what I'm paying attention to. Obviously, we don't know what's going to happen over the day. This could easily push all the way back up, print a green histogram, and then it doesn't invalidate anything. We don't have to worry about that. But hypothetically speaking, if this continues to just go lower and starts printing, we could potentially invalidate any bullish divergence, which is for sure a possibility. And we don't get any kind of reaction rally. Dollar keeps melting down, goes straight to zero, and everybody was right. Peter Schiff gets to say I told you so. So we're going to take this out of here for now. We'll wait until, we see some kind of signs that we're bottoming. I don't think it's likely that we're just going to continue straight down here to that like 100 target. I know that's our target, like longer term. I thought we had a box in here for that. But I don't think we're just going to come down here like all at once suddenly. But I mean, I wouldn't rule it out. Typically, when you come down to 200s, you see at least some kind of reaction rally. Even if you have an overshoot, some kind of at least backtest and rejection. It's not common that you just completely melt down. Now, if everybody was just on the wrong side of this trade, on this DXY trade, and then we break down from this, ascending support line, put in a series of lower lows and lower highs, and people don't reposition, I mean, it's fully possible that this is essentially like a squeeze, a long squeeze, So paying attention to that, obviously, longer time frame wise, let's take a look at the DXY since we just had the weekly close. So pretty aggressive sell off right here. Definitely looking like a spike top on longer time frames. 8 and 21 bear crossing. We talked about the potential scenario of a backtest to retest the 200 exponential and simple. That's right here at like 98 on the weekly. All red histograms, red slope line. Stoch's powerfully angled to the downside. It looks like we're going to come down here. Now, on the way to like 98, let's just call it 100 for simplicity's sake, we do have quite a bit of sideways consolidation and a couple tops and everything. So I would expect some temporary kind of supports along the way, including this previous little spike right here. But for now, it's worth paying attention to. On shorter time frames, we're clearly in at least a short-term downtrend. On longer time frames, we need some kind of pushback up for a lower high before we can say that. It seems likely we're on like an A correction. We're going to get a B back up, push back up for a lower high, and then we'll get a C correction back down to the 200s. And then that's going to be basically the buying opportunity of a lifetime as we essentially start into one of these like massive bull trends again. And that's like the final dollar short squeeze probably, as everyone has to buy the dollar to exit it, to like get out of it, and then it dies as the world reserve currency. Like, sure, okay. So on the monthly, so we did take out obviously some local highs right here. Didn't quite get up to the 120 level, but we know that, sorry, this chart's so damn ugly, but we know the orange internal fib retracement is from that previous high down here, and we made it up to the 786, shot up to the 886, touched it perfectly. So no coincidences here. I mean, that was as textbook as it gets. And now we came back down to back test the top of the channel, which we then lost as support. That was where the monthly closed right there. And now we're selling down below it. Now, it's not crazy to think we come down here, we touch a 21 on the monthly, and then we go, back up from there. We find support here, retest the 21, retest the descending resistance in white, break through it, and then back test up, and then we can see, do we get rejected at 786 or we go all-time highs? You guys know statistically the 886 has almost like, it's like a less than 5% chance that that's going to be the macro top and, basically reversal point. Usually it acts as short-term resistance, come back down, build some strength, and then we take out the previous high or at least retest it. So that's what I'm expecting. That's my base case for now. So that being said, 200 exponential above the 200 simple on the monthly, both blue. That's extremely, extremely bullish. We're seeing basically for the first time on this chart's history, since we confirmed into a bear market in 1985, we're seeing we have confirmed into a bull market for the first time. Now keep in mind, we confirmed into this bull market in 2020, January. After that happened, after we confirmed in the bull market, we shot up, got rejected at 103, and then came all the way back down to 89. So we had a quick move up, rejection, and came down pretty deep. We went straight up here. So it's not crazy to think we're going to backtest some of this key support, including like 200s and whatnot, before we can go higher. Now, could it just get rejected, go lower, that's a wrap? Yes, it definitely could. That is 100% a possibility. Hard sell signal coming out of the bullish control zone, bunch of red histograms, pretty juicy red candle right here. So we don't want to rule it out. It does look like, short term, it looks like we're probably going to get some kind of bullish move, even if it's like a dead cat bounce equivalent. Medium to long term, looks like we have further downside potential. And that, again, aligns with the potential for at least certain equity markets having a pretty nice rally. And I'm not talking about like, just till the end of the year and year-end rally and then that's it. I'm talking about, 6 months, a year, 2 years. I mean, we could be looking at some serious potential here. So, I know people get stuck in bull market mentality and then they get wrecked because they don't realize we switch into a bear market, or they get wrecked in bear markets and miss opportunities because they don't realize we shifted back into a bull market. This is it, guys. I'm telling you right now in real time what I'm seeing based on my strategy that I've been telling you exactly what we're looking for this whole time, and it's happening in real time. So, if you don't at least slowly start to nibble back into these markets, and then we just start going parabolic and you get Peter shift, you get left behind and end up sitting out on the sideline talking about how everything's overvalued for the next 30 years while you don't participate, that's on you. There's no one else to blame. So that being said, taking a look at Tesla. So we did come down to the macro 236. I still think we're going to come up here and backtest the green 236. So 209 still looks like the target for now. We're close to 821 bull crossing again. Obviously bullish divergence corresponded with support for that little bounce. So Microsoft, pretty strong move back up here to our descending resistance. Almost to 200 exponential and simple. Almost to the top of the target. 23%. Congratulations to anyone that's along for the ride on that trade setup. Apple, nothing really changing right here. Again, we bounced that key support, trying to reclaim the 821. It's all about if we get above these 200 exponential and simple. If we start closing back above them and they flip back bullish, I'm out like trout. I have no more interest in betting against Apple, at least like short to medium term. But in the meantime, I still think we have lower prices. So Google got the 821 bull cross on the daily. Got the blue slope line, Stoch's powerfully angled to the upside, reclaimed the 382. Seems very likely we're coming up here to retest somewhere around like 111 to 115. We'll see. I don't want to see things taking too damn long to get up there because it means nobody else is seeing what we're seeing or nobody else is interested. So Meta basically came up here, finally closed the gap, got that last little push back up. So it's all but closed at this point in time. There's pretty strong resistance right here, still well off the 200s. Theoretically speaking, if we clear through, this 124 level in blue, 166 is the upside target. And realistically, we didn't quite get down to the entry here at like 82. We almost hit at 88. So this one could run away a little bit back to like that 155 to 160 level. So Amazon on the daily looks very, very weak. So we gapped up a little bit here. We kind of closed the gap right there, consolidating sideways below the 8 and 21. So we see like a lot of the other assets we just looked at, even like tech assets, the 821 bull cross already took place and we're moving up here. So why does Amazon look like shit? Well, we talked about this in the fundamental breakdown. I did like a very deep fundamental breakdown. Well, let's do a quick summary right here. And the summary is basically Amazon's about to have negative profits for the year. So, if we look at like our 4 recent quarters, this was the Q4 2021 comp right here, and that was 137 billion revenue and 14 billion net profit, and about a 10.5%. So then this year we had 116 revenue minus 3.8 billion and obviously negative profit margin. So, we can run a tally on these. Q2 of 2022, we had 121 billion and negative 2. And then Q3 was profitable, 127 and 2.8. So if we take that 2.8 billion in net profit from Q3, and then we take away the 2 billion in net loss from Q2, that puts us at basically around 0.84. And then we add another or subtract another 3.8. We're basically at like 4 point, roughly like 7. So we're 4.7 billion negative. So what if we just do what we did last quarter of last year? 14 billion net income. So that would at least put Amazon, positive for the year if they have a $14 billion profit. I mean, realistically, they only need like a little over 4 billion, but it just doesn't seem that likely with everything going on here. So if they get a good Q4 like they did last year, but again, look at Q3 last year. It was a net income of 3 billion. So fairly similar to this Q3. So maybe they are really ramping up for a big Q4. We'll see. We'll see. I mean, as long as it's over 4 billion, at least it's like a break even. But I mean, that's not great to me. If you're like, oh, we did like a $500 billion in sales this year, and you're like, oh, nice. How much money did you make? Oh, none. Well, what do you mean none? Oh, we'll be broke even. So you sold a $500 billion in fucking goods and services, and you broke even? And that's where I want to put my money? Or do I want to put it in something else that's doing well? So that's how I look at it. There's a reason, in my opinion, Amazon is underperforming. And then say they do. Maybe they do make 10 billion, next quarter or Q4 or whatever. Maybe they did make 10 billion and they print plus 6 billion in profits. And then all of a sudden, it's like catch up. And Amazon's up here at like 124 or something like that. I don't know. I mean, it's possible. But, those magma stocks ain't looking so great right now. Fuckers. What's up, Toby? Good to see you, my man. Says, great stuff, Crypto Trend Trader. Could you please check BRK.B and PBR? Yeah, I'll put them on the list. Mm-hmm. All right. So let's go ahead and work through these bad boys. Oh, Caterpillar's back. I thought we stricken that from the records. So gold, obviously corresponding with the dollar, was kind of chopping around here. The dollar just put in new lows. Gold shot up to new highs, trying to reclaim the 200 exponential and simple. So far, doing a good job. 200 simple back bullish. All we got to do is basically just continue up here. We already took out the previous high. So as long as we keep this momentum here, we take that out. No bearish divergence or anything like that. Now, if we do get rejected at this level, we're going to 100% print bearish divergence. So worth paying attention to. But the truth is, we're trying to reclaim the 200s. Let's look at our weekly chart. So we obviously had a, pretty big like consolidation lower high right here. And we had a series of basically like flat or same lows. And then we broke down from those lows, put in like a W double bottom. And then as soon as we broke through that, we get the measure move up. At that point in time, we reclaimed the 200 exponential and simple. We reclaimed the 8 and 21 bull cross. And now we're basically at that previous resistance. So what are the potential things that are happening? We shoot straight up through this and go to new all-time highs. It's a possibility. Starting to build momentum, blue slope line flipping, hard buy coming out of the bearish control zone. It's a possibility. We go to new all-time highs, and that's it. Just off to the races. Based on the weekly. Next scenario is we run into resistance right here, get rejected, come back down to the 200s. And then if we do that and then we get a bounce, which you would expect, it's going to look like basically. It's like whenever I hit the unhide tools button, like I never know what's going to show up. It's like handing somebody your phone and you're like, oh, don't scroll through those pictures. I don't know what's in there. Shouldn't be anything too bad, but if you get traumatized, it's not on me. I don't know what kind of shit you're into, man. So anyway, if we look at this, this starts looking like the potential setup. Doesn't have to happen. Starts looking like the potential setup. Okay, if we do get a rejection right here, that's actually maybe really, really fucking bullish. And if we get something like this where we don't come all the way down and we get like a shallow right shoulder, that's actually really bullish. And then we could start looking at basically, what's the measure move look like for this? What would the potential take us through if we did get through that, etc. And that basically takes us back up here to threaten the highs. Now, does it just put in another in a series of lower highs and lower lows? Maybe. But, at least gives us a shot to come up here and try to, fight for that 2000 level once again. And then if we do go out to the monthly, that's what we really have to pay attention to. We broke down, we got the bear cross on the monthly. We got a pretty aggressive bullish engulfing candle. This is a really good example of a 3-line strike. So I was talking about this. It's a not very common chart pattern, but it's a strong one. Usually you have a trend in one direction, and then you have basically a big reversal candle, and it engulfs the prior 3 directional candles. So we have 3 bear candles right here in a row, and then we basically have a bullish engulfing candle that takes out the 3. That's called a 3-line strike. So that is a perfect example of a 3-line strike, and that's basically, like a bullish, like reversal type pattern. Now, it doesn't mean it reverses and goes to new all-time highs. It just means, hey, we're going to come back up here and, try to test up to the highs. So one thing that does concern me, though, is we saw, obviously, the peak right here. We back-tested the slope line while it was blue, got rejected, and then went to new lows. And now it looks like we want to head back up here. The slope line flipped over blue again. And if we come back up here and get rejected off it again, it's just going to be another heavy rejection. And that's probably what's going to take us back down to like the 1300 level. Does it have to happen? No. Starting to see a clear divergence in what happened last time. So we have been using this as a clear example, and that was what, gave us basically the anticipation of this big fall right here. Now, that being said, this is looking different now. We have reclaimed, or at least trying to reclaim, the 821. So, rather than building momentum to the downside, we're still fighting for the momentum to the upside. So as much as gold was looking really weak, this monthly candle is, enough for me to say, hey, actually, these bulls might not be dead yet. Now, does that have to happen? Is that only because the dollar's melting down? Yeah, sure, of course it is. Dollar end yields. Silver looking very powerful. Obviously took out the measure move, so even more aggressively bullish above the 200 exponential on silver. Simple again. Now we know silver is a twitchy retard asset. So, obviously nobody gives a shit about silver when it's doing bad. All the fucking crackhead, investors, whatever you want to call them, come out like the second silver's doing good. That being said, this is like probably the worst investment you could have ever made, like in the last like 50 years. It's like still not at all-time highs, and everything else on earth is at all-time highs. So it's the worst investment ever. Well, other than like something that Sam Bankman-Fried does, that's if it went to zero, it's worse than silver. Otherwise, it's probably better than silver. So that being said, key resistance up here around like that 25 level, and then we start actually like saying, hey, we're building some positive momentum to the upside and starting to build some structure. And then we can start looking at the cup and handle. We start looking at coming back up here to 30 and all that good stuff. We did a pretty deep dive on the last one talking about potential targets of gazillion dollar silver, which is like not bad. I guess it's worth getting out of bed for. If silver goes to a gazillion, I'm out of here, guys. Sorry, I'm gone. Never heard from again. Silver junior miners. So we talked about this setup. Obviously been playing out real nicely. 66% move. We're halfway there. Back testing resistance. If it's going to fail, it's probably going to fail right here. Potential for taking some serious profits off the table, at least if momentum starts rolling over, or at least a running stop We are threatening the 200 exponential and simple, trying to get back above them. We talked about how the only real headwind for this trade setup was the fact that silver and gold didn't look particularly good. It's going to be difficult for the miners to rally without the underlying. And now we're seeing the underlying. So, looking pretty good right now. If we break through the 382 and the 618, we're basically at our target. So let's go. Let's fucking go. GSG. So again, threatening the lows. So we dropped out the bottom once, dropped out the bottom again, but at least put in a higher low. Trying to get back up in here inside of the channel. But the truth is, this looking pretty freaking weak right now. Looking pretty weak. Seems very, very likely that we're coming back down here. 200 exponential has already flipped red. 200 simple is basically flat. And we're below them both right now. It seems like a high probability we're getting ready to take out these lows. And probably coming down to like that $17, $18 range. And this gigantic big blue box, which doesn't look nearly as aggressive on the weekly. But on the daily, it's like, oh, my blue box is everywhere. My target is any price. LNG on the daily. Not doing a ton right here. Looking for this to come up here one more time. Potentially put in another high and another drive of bearish divergence. I mean, still staying strong. Makes sense, obviously. As long as Europe keeps going full retard on energy policy, which, they're basically like, you can't come back from some of the stuff they're doing. It's like, once like pipelines are no longer in use, especially if they're blown up or nuclear reactors get shut down, like, okay, dokie, have fun paying like 3, 4, 5 times as much for natural gas as you did for oil. Okay, sure. I would be like legitimately concerned about the country that I live in general, and the decisions that they're making for like our future. Only if you want stuff like energy and food. If you don't care about energy, food, or shelter going into the future, by all means, just go about your life like nothing's wrong. If you do, if you require energy to like do stuff and enjoy life, if you require food to sustain your presence on planet Earth, and you do need shelter as well, I would maybe start like getting involved in real life politics before you end up in a cage eating Soylent Green. I don't know if anybody's seen that movie, but okay, so Mosaic Company, little fertilizer action. I don't know if you see what's going on in the Netherlands right now, but they're basically like shutting down all these farms now because they're not compliant with new energy policy. Well, as long as they don't make anything important on farms, I don't see why that would matter. It's not like we're getting like, food or anything from farms. So it's probably just not a big deal at all. We'll just look the other way. Well, people get dragged into vans by, police wearing all black. That sounds normal. Sounds normal. For free countries, that sounds completely normal. Holding up at support right now for Mosaic. If this thing drops down, obviously retest the lows. And then, we have targets down here at like 33. But, again, 200 exponential flipping bearish below it. 200 simple basically flat. We're very close to confirming into a bear market. So, lots of stuff right now that was really bullish. Energy, DXY, other stuff that we looked at today that I can't think of right now. Those things that were bullish, looking pretty weak. TNX, a bunch of them. And then meanwhile, a bunch of stuff that was really strong. No, that was all the strong stuff that now looks weak. A bunch of stuff that was weak is now starting to look pretty strong. Like the Dow Jones. URNM, again, confirmed into a bear market. Hanging around here for now. But this is not what you want to see. This is not bullish behavior. Just hanging out underneath 200 moving averages. This is literally distribution taking place. Lower highs, lower lows. We're just trading inside this range again. Every time we hit the top of the range, we got our dick kicked in. Every time we hit the bottom of the range, we got a pretty big bounce back to the top. Whoop. And now none of it lines up. So now at this point in time, what are we looking at? Where are we at? Okay, we're in the top portion of the range. Below the 236, below the 200s. So it seems more likely than not that we're coming down here to the bottom of the range. So, the best thing to do is we go sideways until we touch the top again, or we get a little pushback up here again, and then look at that as a shorting opportunity, obviously, to the bottom of the range. Still very bullish on uranium long term, but this is not, constructive bull market behavior. We're in a bear market. And, obviously we have like sort of a flag pattern taking place right here a long lead in followed by like, a consolidation. But it's not just a neutral consolidation. It's lower highs and lower lows, which typically leads to more lower highs and also a lower low. So we just put in another lower high. That's 3 in a row now. We didn't put in the lower low yet. So it seems likely that we're going to get a lower low. And it's probably going to be like $51. So, of course, that lines up perfectly with our 382 target and that previous low right there. So, that seems likely where we're going. And then after that, probably much, much higher. CCJ on the daily, basically the same thing. Same thing, not quite as constructive of a chart. Okay, so Tilray, we've been talking about Tilray. Obviously, we took our profits on the top of the channel and, 200 moving average touch. We consolidated here for a little bit, and then we got a nice aggressive stab up here to a new high. Now, there's two things we have to look at right here. One is, it's basically a retest of a 200 exponential, which is above the 200 simple. So could Tilray have bottomed already? Yes, it could have. It definitely could have bottomed already. It's up basically 100% off the lows. Almost, not quite. But it's almost doubled off the lows. Now, granted, that's after going down like 99%. But that being said, we have this very clear descending resistance in white. And we tagged it right here, consolidated, and now we broke through it. So the argument here is that we're actually about to have like a measured move breakout of this channel. So all we have to do is just hold at these levels. And that's when this big boy trade setup that we've had here starts potentially playing out. So what started off as like 30 to like 38%, and we took some profits, essentially a little lower than where we're at right now, starts turning into a serious confidence trade above like 485 for the potential remainder of the move. And this is a 289% move. And you're like, oh man, I wish you would have told me. Well, I did. I've been telling you the whole time. It's up to you. You have to actually execute trades if you want to. I can't do that for you. Now, that being said, let's just say you're like, oh, I missed a party now. There's no more gains. Well, all the gains got had already. Oh. Speaking of gains, what do you guys think of the Liver King? He's on steroids. I don't even know what I believe anymore. I feel like that just completely destroyed like my grasp of reality. If Liver King is not all natural, I just don't know what to believe anymore. It's so crazy. He lied to us, guys. 170% if we wait until we close above the 200 simple. And, and obviously we still have part of our trade setup open. But, if we waited to get back in here at about, let's say like 485, call it $5 back above the 200 exponential and simple, which are close to flat at this point in time. So it wouldn't take long to get another one of these, confirm back into a bull market. All this trade setup is 170% in the bank. And it's just to the 0.5. Maybe we come up even higher to like that $20 level. But this is a $13 price target. Not crazy to think that we could get there. But also, pot stocks are obviously garbage and just getting completely wrecked. So let's not get too excited. So UNH, so one of the big boys, the biggest name in the Dow Jones Industrial Average. So we basically have this resistance series of higher highs, 1 time, 2 time, 3 time, series of higher lows, 1, 2, 3, trying to break through this. We're basically squeezing into a super tight bullish triangle. And you guys know, obviously, measure move target 1.236, 1.5, or the macro target 626. So we're at 536 right now. So could have some legs on it. Goldman Ballsack. I think we're still in the process of this little 3 action right here. I think we still have one more leg back up to retest the highs. We'll see. Obviously a bunch of red histograms, but price hasn't actually like gone down or anything. So kind of just looks like a bullish reset to me before we get that last little push. Now, arguably though, if this plays out exactly how I have it here, which of course it will, arguably, the real play is to buy the 4 on the pullback. But, you could basically buy where we're at right now, ride out the 3, hold, take the drawdown, all of that. You're just right back where you started, and then we go higher. So, this is like a kind of, I don't want to say it's a low risk area for a continuation trade, but it's pretty bullish. Now, if we roll over right here, I'm wrong that this still has a leg up and like that's the 3. I mean, this is the deepest retrace we could have. So if I'm wrong, the 3 has topped out. We're about to get a 4 retrace. The lowest it could go is 359 before it starts invalidating our 5-wave structure, at which point in time, this is just garbage anyway. Didn't play out. We were wrong about it. So we got to kind of see how it plays out. Seems more likely we're going to get another push up here and then that back test, and then it's off to the races from there. Does not have to play out like that. But, obviously a super shallow retrace from here to like, 159 or whatever I just said. Not going to look like structurally sound. So HD is next. Home Depot. Macro. Massive W. Double bottom. Measure move. Target up here. 408. A big juicy 27% gains. Again, I mean, I can't make trades for you. If you think a trade setup looks thick and juicy and you think it's about to play out a W double bottom, and it does, and it starts moving and you don't get into it, and the next thing you know, I'm like, okay, that's it. We're taking profits at the 27% target, although we are likely double topping short term. Maybe we have a pullback before we go higher. It's up to you. You got to make these decisions on your own. We're above the 200 exponential. 200 exponential is blue. We're above the 200 simple. It's very close to flipping blue. We see exactly what happened on a couple of these assets already. What happened after they both flipped blue? Shot up. What happened? Well, nothing, because it was just always blue. We'll get to some other ones going the other direction. But we know what happens after that flip occurs. We get a pretty big move up here. And we can see it happening in real time. I mean, look what happened on Caterpillar. Get back above here, start shooting up, back to the highs. And this is why the Dow Jones looks so good. Well, those were. McDonald's obviously is not why. I mean, it is on the macro, but right now, it looks like it's about to take out that low, come back down here. Why is McDonald's getting wrecked right now? I don't know. Apparently people are taking a break from rat burgers. I'm not sure. Or whatever they're made out of. I don't know. Lips and assholes. Amgen obviously got that pretty parabolic move right here. Consolidating. The real question is, on this one, is this setting up for basically like a bullish reset before it goes higher? Or is it, just getting ready for the floor to fall out? I mean, broke through clear resistance. It's not crazy to think we could have a pullback, but I think people are going to jump in trying to buy this thing. So we're not likely to get back to 257. And if we do get back to that level, I would be concerned whether or not it's actually going to hold. Microsoft, we already took a look at. Trade setup almost played out. Congratulations to all the Microsofties. Ooh, that's not a flattering name. Sorry about that. Visa is next. The big V, the flying V. Same thing. It's setting up for what could potentially be a ridiculous move right now. Descending resistance that's clearly just rejected us. Okay. Break through that. Get back above the 200s. 200 exponential, blue slope above the 200 simple. About to cross over here. The bull cross. 200 simple is about to cross blue as well. Back into a bull market. What's the next thing that happens after that? I mean, we know what happens. We know what happens if we break through this level. Measure moves, retest of key Fibonacci levels, new all-time highs, orgies in the Bahamas with nerdy, ugly people. Or no, wait, that's if you work with Sam Bankman-Fried. That's different. That's not from this. That's not from this. That's different. Honeywell International. Again, what happens? We get above the 200s, boom, parabolic. And you're like, well, it's not parabolic. I mean, it's basically a straight line. So, quick 15% on this billion-dollar company. When big companies move like this isn't some Kathy Wood fake stock that doesn't make money that trades at, $3. This isn't some fake. These are real, actual companies that make money. The few that are left. Are there companies that actually make money anymore? Or does everybody just say, eventually we're going to make money. Right now we're just going to capture market share. I'm like, check out my business. You're like, what's it do? I'm like, well, we print $100 bills. And you're like, wait, what? Well, I mean, we don't print them on our own, but like we sell them. And you're like, oh, okay, so you just sell currency? And you're like, yeah. Well, do a lot of people buy currency? And they're like, you do what they do when you put it on sale. And you're like, how much are you selling it for? Well, we sell $100 for $80. So wait a minute. You sell a $100 bill for $80. And you're like, yeah, we're growing the business right now. We're losing money, of course, obviously, $20 on every 100. But I mean, eventually Once we get enough people, once we build up the client base, once we get rid of all the competition, then we jack up the prices and we start selling people $100 bills for 110. And then we start making $10 instead of losing 20. What do you think of the business plan? I mean, obviously that's retarded, but that's like what people are like predicating like future business revenue of some of these things. You can't, it doesn't work like that. I mean, I know people think it does, but you know, that's called easy money syndrome. TRV, new highs on this thing. I mean, it just looks ready to rip or print some nasty bearish divergence and just melt down. So, I mean, is this about to pull a Bitcoin? It might actually. I mean, it printed some nice bullish divergence right here. Really, really heavily respected it. Nothing really right here. Did print bullish divergence right here. So I would be very, very careful of this potentially printing bearish divergence because this appears to really respect divergence. DE, the old John Deere. At the highs, little gap up right here. I don't know. Maybe we're not going to come down and fill the gap, but honestly, probably is a buying opportunity. I mean, it's definitely got some legs. 200 exponential about to cross over here. It's crazy that this only pulled back to the 236 and then just ripped off of like nothing. You don't often see that. I really was expecting this down at the 382 and definitely missed the boat on that one. So Lulu, another one of the active trades right now. So obviously 50% back to retest the all-time high. You know, we were talking about if we clear the 618, how that's an important level. It does appear like we did, and we're headed up here to the 786 next. So about 420, we'll round it off, 421.84. We'll call it 420 for Elon's sake. Yeah, looking pretty thick and juicy. Congratulations to anybody that's in that one. Obviously, at this point in time, we've moved up enough that it's worth putting our stop loss at our entry price. 200 exponential blue, 200 simple blue. Both are positive. Slope to the upside. Looks good for continuation. I mean, normally I'm not like huge going into earnings on shit, but I mean, let's be real. You know, Walmart is selling the fuck out of these Lululemon sweatpants. People are eating it up, okay? They got socks, they got sweatpants, maybe even yoga pants too. I think they got hoodies, maybe even a scarf coming into winter. I don't know what they do, but exclusively available at Walmart, and they are killing it. I mean, last, like, all the earnings are beats, so I would just assume probably more of those. Attention, Walmart shoppers. UUP, this is that dollar play. So we did get that gap down, that next leg, the push to the 200s. So this is it. I mean, do or die, obviously, on this. The potential for the bullish divergence. I mean, it's about as dirty as it can get right here. If it goes any lower, builds momentum. It's already putting a lower low on price. So, again, it's not common that you just smash the 200s and then just completely go through them. It is possible, though. It is possible. Doesn't seem likely, though. And again, we're at the situation, too. Think about how now, granted, we're only looking at, like, you know, mostly good stuff because we're paying attention to, like, a bunch of big names in the Dow Jones and then, like, a bunch of just, like, random trash big name stocks and stuff. But the truth is, you know, we're at that point where, you know, it's basically SR flip time. Like, support becomes resistance, resistance becomes support, bull markets become bear markets become bull markets, or they don't, and we see continuation. So it's one or the other. This is either the biggest fake out of all time, or the trend is flipping right now, and, you know, it's up to all of us to reposition accordingly. Or, you know, miss out, obviously. FOMO! So daily Bitcoin. So we are above the 8 and 21. They're very close to a cross. Blue slope line has flipped here. Bunch of green histograms approaching the 0 line above the slope line. Left the bullish or bearish control zone. Hard buy signal. Entered the bullish control zone right here. Took out that previous high. I mean, this looks pretty good overall. This looks pretty good. But when we zoom down here to the lower time frames, what is this playing out right now? Oh, it's exactly what we said. The retest, the back test, the 4-hour 200 exponential and simple. And then if we turn on our drawing tools, we see we had this pretty clear support, which was our triangle right here. And then we obviously pushed out a little bit and then broke down to new lows or retested lows. And then we came back up, retested, what was a blue support line becomes a red resistance line. Resistance, come down, higher low. Resistance, come down, higher low. Now we're headed back up to hit resistance and the 200s. So if we're going to get rejected, this is the area we would expect to get rejected from, 17.5, the target. And we also see the knife is literally like through the fucking roof. Now this is not some garbage indicator that tops out at 100. No. The knife can go to 1 billion. It can go to a gazillion, okay? The silver target price. That's how high the knife can go. There's no limits on this motherfucker. But also, probably when we see a big spike like that up into these levels, above the 100 level, it's like literally the top. So you're like, no, you made it sound like we were bullish and now it's the top. Fuck you. That was this top right here. Not that big of a deal, right? We went down a little bit and then we went parabolic. That was this top right here. Consolidated a little bit and then actually went higher. That was this top right here. Basically a giant throw over and then we collapsed like on our way to zero. So like, different stuff can happen. That was the top right here perfectly. That was the top right here. I mean, so it doesn't just have to melt down and go straight to zero. Sam Bankman-Fried already scammed everybody's money, so it's not like he can lose any more money. He's already got it. You got it. You got your money. You got your money. Dude, all I'm saying is, if I was scamming like $8 billion from people, allegedly, obviously innocent till proven guilty, but let's be real, I would not be banging like ugly Harry Potter like retards. Very, very strange scenario. It's like you got all this money and then you didn't realize like, oh, I don't have to wear the same sweatpants and t-shirt every day, like showing off my man boobs. Oh, I don't have to drive an old Toyota Corolla. Oh, I don't have to still bang ugly, gross nerds. Like, it just never hit him. I think he got too rich too fast. He forgot to upgrade his life. He bought like a mansion and then just did bum shit in it. He's like, well, back when I was living with my parents last year. So anyway, whatever we were talking about, that's exactly what I said. So, knife 4 hour, that's it. Yeah, so knife 4 hour topping. I might have said daily, but you know what I meant. So back to the daily. So we are building up momentum right now. It's worth paying attention to a lot of times when the slope line flips right here, because I have it at such a long setting. We do actually like go lower after that. So here it flips blue and we get like that push down. That's almost always a buying opportunity. Now it could get rejected, but it's almost always a buying opportunity. Here we get the blue slope line flips. We immediately sell off afterwards, but don't put in a new low. So either one can happen. But we're at that point where, when this flips and then the 821 goes green on the daily, this flips, the 821 goes green on the daily, we usually get at least some kind of follow through. Now, what is that going to translate to? What's a trade setup look like? Are you going to, have the will to get in and out for that 10% or, 17% or whatever? Where does this likely take us to if we do get a push up here? I mean, let's just say we don't get a push down and we just continue to the upside. If you just buy straight now, the likely area we backtest is that channel we went sideways in forever. So that's a quick, basically 10%. And that takes us to the descending resistance line from the peaks right here. It takes us to the macro support line from Bitcoin's life cycle. So basically like, we break down from Bitcoin's life cycle, we backtest it, and then potentially either reclaim it and go higher or get rejected and go straight to zero. And then, you have to share you have to share a room with like another couple because you lost all your money on crypto. Move in with like your your best friend or something like that. Sleep on his couch. Probably your wife left you, I think, if you lost all your money in crypto, or a husband, whatever. I don't want to discriminate. But right now, looks like there's some potential for some more legs on this. I wouldn't get too greedy with it. I think the real thing to pay attention to is what happens when we smack that 17.5 level and those 200s. On the longer time frames, though, still looks disgusting. The weekly still looks horrible. It's the worst chart I've ever seen in probably like 10 minutes. It's terrible. Weekly resistance is a little closer to like 18.7. We're back on top of the slope line here and have multiple green histograms. We left the bearish control zone and have a hard buy signal. So we don't want to be too crazy bearish, even though we're well under the 200 exponential and simple, and 200 exponential is red. 200 simple is very close to flipping red. It's not crazy to think we're going to go test 24,500. It's not crazy. Matter of fact, very close to my base case at this point in time. On the monthly, though, we didn't quite get to that 14,000 target, but I wonder if we just got a little greedy and there was just like a front run. I mean, 15,479. So it was pretty fucking close. So we'll see. Still all red histograms, bearish control zone, new monthly low. None of that stuff looks good. So there's still a lot of really, really bad shit. But there's a little good shit now, too. So Ethereum is next. On to Ethereum. So on the daily, the bull cross already taken place. Seems likely we're going to come back up here, test the 200s again. So what, 1450 and 1615. Again, blue slope line and momentum. Stoch's angle to the upside, inside of the bullish control zone. When we look at the weekly, we're below the 200s still, but we're back testing. We do have a bunch of green histograms back above the slope line. Stoch's starting to roll back to the upside. So we've got a bunch of resistance along the way, but again, not crazy to think we're going back to like 1575. Monthly didn't put in a new low, so that's good. Everything else basically the same. Nothing really changing on the monthly. But we only have to look at the monthly chart once every 30 days, so maybe a refresher in between. People wait, there's a monthly chart? I thought it stopped at 10 minutes. Total weekly market cap for crypto. So we did put in a new low right here. So just a series of lower highs and lower lows, complete meltdown below the 200s. Basically looks exactly like the Bitcoin chart. Bunch of green histograms back above the slope line. Not bad. Starting to actually look like kind of decent. Obviously looks terrible because we're under the 200s, but 1 trillion is really the area to get at. And we're at 820 billion right now. So realistically, expect a 25% move before we even see if we're bullish or bearish. That's just a check. Bitcoin dominance on the weekly, still hanging out at the lows. Bitcoin dominance less the stable coins. Nothing has really changed right here. Nothing has changed at all in those charts for a while. Cheese cannot hold that 200. Back down below it for now. Not looking great here. If we lose this key support level, it does seem likely we're going to 13 cents. This one looks pretty weak after being very strong for a while. It looks like it's trying to bottom out here, though. It would look much better if it just got an aggressive wick to the 236 and then got just completely bought up. But I mean, we're approaching the level where it's all the risk is, I shouldn't say all the risk, but 80% upside, 20% downside. So it's still a 4-to-1 risk reward ratio. And it's basically neutral. You could argue it's bearish because we've been in a downtrend. You could argue it's bullish because we've been trying to flip the trend. I would say it's bearish neutral. And I would prefer to get an entry, down here with a much tighter stop loss, something like that. 124% versus 7. Much, much better. It's 20 or more. Solana still looking pretty bad. Did reclaim the 8. Bunch of green histograms. Reclaim the slope line. Pretty aggressive move up here on the stochastics. Seems likely Solana wants to go back to $15. I mean, this right here, though, man, if Solana ever gets strong again, or tries to, or I don't know if it was ever strong, but if it's ever not a complete dumpster fire piece of shit that nobody wants, I mean, one day, it's not crazy to think that it 100%, doubles back to retest this before it just goes to 0. But it's not crazy to think it could have a 100% move to the upside. Or just $1 or $1. That's all. And then it tops out because nobody wants it. Link on the daily. Back above 200 simple. 821 bull cross. Blue slope line. Bullish control zone. Pretty aggressive. I mean, it's still barely off the lows. But, I mean, we talked about this potential scenario. I don't know what this is. The potential scenario for a gazillion-dollar move to the upside. We talked about the potential scenario. We're basically consolidating at the lows, breaking through descending resistance just by going sideways. So, again, we kind of broke, if we extend this out, we kind of broke through, this was resistance. We come up and tag it, higher lows along the way. We break through it, support, push up, support. Not crazy to think this thing's ready to rage. If we wanted to do a The measure move's kind of sketchy on this one just because we don't really have like multiple touches on the bottom. I mean, we kind of do right here, but I would go more with like the internal retracement fib than looking at like the measure move because we don't have like super clear targets. But I mean, we banged our head on the 236 a bunch of times. We have this clear resistance here on white as well. If we break through that, obviously the next target's the 382. Back test some previous support. That's like $11.20. If we get to the 0.5, we're talking about $14. 618's $18. You know, currently at $7.50. So again, not crazy to think we could have, you know, a pretty big freaking move up here if and when, you know, crypto actually like strengthens. Now, that's a sketchy one right there. It's like a super, super ridiculous stop loss. I mean, it's still like 3-1, but obviously you're not going to run a 26% stop loss. I think realistically, what you would have to do is run the stop below the 821. And if we break down and start closing below that, we're probably going to bear cross again. And then you just got to reevaluate. But if you take out this previous swing right here, you want out. So then it becomes basically conservatively 10% stop loss, 49% upside. So, you know, we're talking about like 5-to-1 risk reward ratio. Obviously, you know, that predicates us getting through the 236 and then above the 200s, which seems, I mean, it doesn't seem crazy. I mean, one of two things happens. It either doesn't get above them or it does. So, I mean, and the other option's 90% upside with like 10% downside. Or 9%, whatever. It's like 10-to-1 risk reward ratio. Not bad for the chain link, for the stinky linky. AVAX, Avalanche, getting ready to cross that 821 to the upside. Blue slope line, momentum in its favor. Bullish control zone, Stokes powerfully angled to the upside. While this thing just hangs out at 0, basically. Series of lower highs. Probably should pay attention to, you know, something along these lines. I mean, that's still, man. If crypto decides not to just be a total useless trash asset class, well, no, it can still be all that. But if it just decides that like cult members want to buy it, I mean, we could be talking about some serious pumps here. 20% moves like quick, like single candle pumps. Polka dot, man, this one's so fucking weak. Same thing though. I mean, it's not crazy to think this thing goes to like $7.15. It's building some momentum already and it's not really moving. So it could be about to get its thruster on. 28% move to the upside. I'm not like spending a ton of time on these because you guys know exactly what I do. So you can just do that yourself. You know what our targets are, obviously, everything. Internal fib retracements and moving averages. In case you're new. Matic. That old fatty Matty. Looking strong still. 200 simple has flipped bullish. We're about to take over the 200 exponential and flip it back bullish too. I mean, a pushback to 618, we already made it there once. Seems likely $1.25. And then at that point in time, we're probably going to 786. So that's $1.78. So we start talking about like 100% moves to the upside. And I mean, we could use this recent, excuse me, we could use this recent swing. This one's obviously better because we put in a high, then a low, then a new high. Then we don't want to take out like that previous low. But like realistically, we could run it off this one since we did put in a new high. So we would basically use the 200 simple and the previous swing low as our like invalidation stop loss point based on candle closes, obviously. And that gives us like an 18% stop loss. And obviously we're not shooting for a retest of the 618. We're shooting for the 786. Potential, you know, all-time highs. But that gives about 4.75-to-1 risk reward ratio, 90% upside, 18% downside. You know, obviously you got to make your own trades. It's all about position sizing, risk reward, probability of success, you know, all that good stuff. And I mean, you take all that risk management, okay, you ball it up, make yourself a little risk management snowball, okay, and then you just throw it directly at Caroline Ellison's face because she obviously does not understand risk management. I don't believe in stop losses and trade setups because I didn't learn about that stuff, but I also could be the CEO of other billions of dollars in people's money, and that's okay. I cannot wait to see like the court cases unfold. Let's just hope that there's not like a, let's just hope they don't get Epstein, so to speak. We'll never get our answers. XRP. I mean, trying to reclaim the 200 simple. Probably going to retest the 200 exponential if it hangs out here long enough. Still not that much. XRP sucks. Damn it. I was going to try to not be mean to XRP today. 15% move, though. So if you were like, hey, what's the worst crypto with the worst trade setup, with the least, upside potential? And it doesn't have to, but it could have a cult-like following, if you want. I would say XRP is probably the way to go. Probably the way to go. If you're trying to make the least amount of money out of all the charts we looked at today, if this move plays out, I think your best bet is XRP. So if you're like, I want to make some money, but I'm not greedy, I'll just invest in something that's trash, but could yield something potentially on a positive move up here. XRP is the way to go. Cardano, though. Cardano looking extremely, extremely weak. Trying to reclaim 821. Clearly the worst crypto we looked at today out of quite a few of them. Now, granted, we did cherry pick random popular cryptos. The same ones that people have been requesting all through the bull market and bear market as well. Hard buy signal coming out of bearish control zone, blue slope line, all green histograms, close to crossing 821 to the upside. Seems likely it goes to like 40 cents. So not a bad move as long as you're just buying down here. 20% moves to the upside. Now, if you're one of the people that bought any of this time right here, though, I mean, you're fucked and it's trash and you'll never get your money back. But for a quick trade right here off the lows, 21%. But at the same time, though, I mean, do you really want to, with all the charts we looked at and all the potential and all the good stuff, it's been a while since we did one of these. Been a while since we did one of these. And this is the sell zone, okay? Everybody that bought this asset since January of 2021 is now officially upside down. So the last, year, 2 years worth of buyers in Cardano have lost their money. Most of it, or some of it. About 90-something% of it if you bought the top. Maybe 10% if you bought right around here. And then you just never, you're like, I'm going to hodl. This is great. Oh my God, I'm killing it. I'm a goddamn genius. Oh no. Oh my God. Well, it can't go lower, bro. Oh, it's going lower. I never should have staked my Cardano. And that's where we're at now. So every time we push back to the upside, this gets a tiny bit smaller, okay? Because there's less and less people that's upside down. But there's so many sellers. It's so hard to beat all this red. So will Cardano ever put in new all-time highs again? Maybe. But it's going to be hell to try to get through all this. And it wasn't just one big candle. And it's like, oh, if we just get through that one candle, that's it. This is just a slow, steady meltdown. I mean, this is just what it feels like to be in an abusive relationship. Just every day you just get beat down and it just hurts and you're just giving up your will. And all you want is just a way out. And you just can't wait to get away and just have your life back and be free and not live like this anymore. That's Cardano. And every time we start to get a push up, people are going to use that as an opportunity to exit. So there's going to be forever just horrible selling pressure on this trash asset until it eventually goes to zero. And then Charles comes out and he's like, I scammed you all, you fucking morons. Suckers. That's not my words, though. That's his. Potentially. Obviously, he hasn't said that yet. But wouldn't rule it out. So BNB, this is the one. This is really what the entire crypto market, is basically counting on. If BNB crashes, everything's screwed. Same with Tether. But otherwise, it's probably okay. We're fine. Everything's fine. So high to low, we pretty much nailed the 618. We're hanging out below the 382. We found support at the 236 pretty clearly right here. So if we get through the 382, retest a 0.5, then maybe the 618. This thing goes to 416. Pretty big move up here, honestly. But is the real trade to the downside? It looks like we're starting to build some momentum. Stokes are looking pretty tired. We're in between the 200s. So if we lose 279, we probably retest the 236. If we retest the 236, we probably retest 211, and then the whole trend looks like it could be in trouble for the biggest meltdown. Well, the next biggest meltdown. If we get above the 382, we probably shoot straight up to the 0.5, and then realistically, I mean 618 seems likely, and then this thing will be back in a bull trend. And CZ's like, gotcha, bitch. All right. Okay. So we got a little request action here too. From the only person in chat with a voice. Everyone else has been silenced. I muted you all. You're like, I would like to say comments. Not today, bitches. Not today. And if you are one of the very, very few people that's still allowed to comment in this chat right now, by all means, I mean, you won't know if you don't try. I would just try to type anything at all and see if it works. Because honestly, you're blocked. Whoever you are. If you can hear this, you were blocked officially. Or not. I mean, you'll never know if you don't try. Just do it. Type something. I dare you. You won't do it. You're scared. You don't know what to say. You're intimidated. I'm just too awesome. I know. Don't let it get to you guys. All right. So, PBR. Man, nobody did type any. Oh, there we go. Jay off in the house. My man. There he is. Hey. What the fucking pop-ups? Sorry, a little misclick action on my Brave. Got a little too brave there. So PBR. Petroello Brasilia Sa Petrobubber. May have mispronounced that slightly. So basically we had this giant ascending wedge action right here, and then we lost the wedge. We talked about the potential, for either retest before continuation, but then essentially we just melted down straight up. And we obviously hit the target like perfectly, which was between the 382 and the 618. Didn't quite hit the measure move, but with the wedge, it's not as like crystal clear. So then we bounced back to the 236. So we hit the 382, we back tested the 236. So we went all the way from the bottom to the top. We broke down, initially to our 236, lost that and hit the 382, back tested the 236. It's acting as resistance currently. The most likely scenario now is basically an A, a B, and then the C. And we hit the 0.5s and hit our target. At which point in time, it would look like a potential buying opportunity, but we are now confirming into a bear market. So could kind of go either way right now. The most likely scenario, I would say, is that we are doing like an ABC correction, something like that. We basically had our little top in here. We came down essentially for a little something like that. We're coming back up to retest there, and then we're likely gonna, basically put in that C leg down. That's what it seems like probably gonna happen. Maybe that was already the bottom. That was it. The 382 is good. And this just thing goes full on boltard. Line in the sand is obviously the support at the bottom and the 200s. So if we get back above those, it starts looking good. If we come back up here, get rejected at those, we probably do go lower. The truth is though, with how aggressive this move was down and then back up here again, if we break through the 236 and get back up to a resistance, I mean, that's really what's going to be the decider. It's tough to tell right now because we're right in between resistance and support. That move is like perfect back to the center. As long as we're below the 200s though, I mean, we're officially in a bear market on this. So my bias is to the downside. So if we, honestly, basically it's like shorting either off of the 236 or on a back test of the 786, basically like a short is probably the trade. It's kind of like missed the best time to short, obviously, was like on the retest of the smaller wedge. But if it did get back up to here and then it did go down to the 0.5, what would we be looking at? Well, if we get back on top of the 200s, we don't want to be short. So we can run a pretty tight stop. And the target obviously is down here at the 0.5s, somewhere in between, like the two of them kind of correspond. That's 35% downside, 7% stop loss. So it's like 5-1, and you're trading with the trend because it's obviously like in a bear market now. Now, here's the alternative, though, is if it doesn't get up there And, you know, we're right. It goes down, but it just goes down from here. Basically looking at like something along that stop's going to be so ridiculous though. Yeah. I mean, it's like 2 to 1, 1.8, like 2 to 1, 28 downside, 15% upside. There's just not really like, I mean, you could take that trade, but like 2 to 1 is my minimum if I'm trading with the trend. Actually, let's look at the longer time frame too. I want to see how that looks because we haven't looked at this one for a while. Yeah, I mean, this is like danger zone right now because we lost the 200s. It was looking like this was, and this is a great example of what it looks like when constructive structure being built, break through the 200s, bull market confirmed, back test it, let's go, new highs, and then actually, no, we fail. So right here, everybody's like, new highs, let's go. We just closed a new higher high candle. We're back above the 200s. They're both blue, bull market confirmed, and then it immediately failed. So, nothing is for sure in this world. And obviously, look at this rejection off. I mean, we talk about when we're below price and the slope line flips blue and how reliable that is. Like for rejection, we see it right here perfectly. We see it right here perfectly. We see it right here perfectly. I mean, that is so clear for like just a complete rejection meltdown. And that was telling us right there. It was like, look, this thing's about to get its dick kicked in. And not in a good way, like those weird videos on the internet where you like take pleasure from the pain. Not that kind. The bad kind, which is all kinds for normal people. That being said, though, if we don't reclaim these 200s right now, this thing, I mean, the downside potential just goes up. The downside potential goes up. The likelihood of going down is substantially higher. That was a much better word. So yeah, I mean, that looks like the way to go. But do we get there? I don't know, man. I would just be careful if I'm like still in this thing right now that we're like closing down below the 200s. Because this went from looking like pretty freaking good and potential for like the start of a macro bull run to like actually no, it's looking like shit. Yeah, I'd be real careful. Monthly about to confirm 821 bear cross as well. I would keep my distance on this. That's just me though. Obviously not financial advice. BRKB. So the real thing to watch here, say it with me now, the old W double bottom. I mean, that's basically it. We got arguably the neckline is the 200s, and we kind of just like already broke out. I guess you guys probably can't see that. But I mean, that's basically it. We got, I mean, the neckline's kind of a little bit jankier depending on where you looked at, but it lines up perfectly with the 200s. I like that. So we basically have like a double bottom with bullish divergence. Come back up, retest the 200s, break through it. I mean, the most likely thing to happen now is basically, Warren Buffett buys Elon Musk. And I mean, that sounds crazy because you're like, I don't know, Elon Musk's the richest man alive. How does Warren Buffett buy him? Well, obviously, the only way that could happen is if Elon Musk is actually a cyborg and he's deemed property by the state, and then Warren Buffett, has obviously like rights towards purchasing the potential property that is Elon Musk or the entity of, cyborg, obviously. At which point in time, I mean, Berkshire Hathaway probably goes through the roof if Warren buys Elon. That could be a big deal. Big deal. So we'll see. I mean, that's all assuming Elon's a cyborg, which obviously he is. So BRKB looking like it's getting ready to set up. I mean, with the breakthrough here, it takes us back to all-time high. So that's basically what it is. Okay. Tag the 618 perfectly. The 0.5 was the X. I mean, the made up thing that I just used that tool because it's simpler than having to draw like 4 lines on my own. So realistically, tag the 618. I mean, 786 is probably next target at like 336. So we're talking about 20 bucks to the upside. It's about what, like 8% or something like that? Not quite. A little, like 7%, 6.5. Um, we're just a little too far off the 200s for there to be a decent entry right here. I mean, obviously, here's the thing, okay? We talk about this scenario all the time. I mean, this is great. It's already broken out above, the neckline of the W. It's above the 200 exponential and simple. They both have positive slope lines. 200 exponential still below. A bunch of green histograms. It's starting to cool off a little bit, but what did we really do? We broke through resistance. We potentially are getting ready or, in the process of consolidating or backtesting before we go higher, and this confirms back into a bull market. So realistically, yeah, I mean, we didn't print bearish divergence. Still looks okay. I mean, looks like it's ready to go. Now, I mean, just the problem is that, if you're not already in a position here, it's not a great entry. I mean, you have to just buy into momentum on this thing. I mean, if we lose the X, the neckline, the 200, you don't really want to be back in this. Now, that's a little tighter than you probably want on the stop loss. Maybe you want to run it down here at like 6.8%. But I mean, realistically, if we start closing definitively below, this peak right here, it's reevaluate. We can get back in if it starts looking better. But that gives us 6.5% upside with 4% downside. That's only 1.6 to 1. So you basically have to be taking a trade based on like momentum, as in I expect this just to go higher because we're flipping into a bull market. Not as concerned, with the suboptimal risk reward ratio. Or, you have to say like the 786 is not my target. My actual target, is back to the top, the measure move. In which case 14% compared to 4%, 3.5%, much more favorable move. Well, and that's okay. As long as you know the rules, you acknowledge the rules, and you can follow the rules, you can break the rules if you want to. But you have to know the rules first, and you have to be able to follow them consistently, before you start making exceptions. Or else, what's the point of the rules if you just break them all the time and have exceptions? But I mean, yeah, this is setting up. See, the only thing is, and this is the biggest thing for me is, we have to like stretch this to where it has to go to new all-time highs to get a favorable trade setup. And we looked at enough stuff today that has just way better trade setups. Even if you're like, oh, I don't want to buy some like trash crypto or whatever. I want to buy something that's actually like good. Home Depot, I mean, it's like the same setup, right? This is like getting Berkshire Hathaway right before the breakout took place. And obviously if you would have got Berkshire before the breakout took place, you're already positioned nicely. So, what would I buy, Berkshire Hathaway or Home Depot? I mean, Home Depot for sure. Even what was another one? The Lulu trade setup even. Now again, it's not quite as desirable because it's already moved so much. Yeah, I mean, you really got to just catch them. You got to catch them earlier, honestly, because usually once that first move happens, the risk reward is much less ideal. So, hey, appreciate everybody chiming in there. What's up, Todd? Good to see you, brother. Digital Durwood says, Bitcoin to the moon. Not. Better not go to the moon before I fill my bags. But yeah, that's it. That's all the stuff we got here. Nothing too crazy going on this week. I mean, there's lots of stuff happening this week. But, I mean, pretty much like next week really is what matters. The Fed meeting. Blackout period in the meantime. Who knows, though? We might get the Fed whisperer coming out, letting us know 50 basis points. We'll see. We shall see. But we are very, very close to a bunch of assets confirming into a bull market. Other people are like, we're in a bull market because we're up 20%. We're in a bull market because this. We're in a bull market because that. But they don't have like legitimate, clear rules to follow. It's like some bullshit thing. It's like, oh, we're in a bull market because we dropped down 20% and then we bounce back 50% of the 20% move. And, it's there's a solar eclipse on the 26th. And I saw a shooting star 3 weeks ago on my birthday. And they're like, so we're in a bull market. Like, that's how most people, like, it's like, what the fuck are you talking about, retards? You know, for us, it's simple. We just like don't even have to look at what asset it is, and we just follow the same thing over and over again. Just super boring. And that's why I have to be like such a wise guy and swear and use metaphors and stuff. Is because honestly, my technical analysis and my way of trading is super fucking boring. And you guys will be like, this is so boring. All you do is just the same thing over and over again. You don't make funny voices or say crazy stuff or anything. This channel blows. And then instead of 5 people watching, there would be 3, which like honestly not even that big a difference. So, but it would be much less fun for those 3 people. So, all right, so we're going to wrap it up there. We got our Wednesday stream, 8 p.m. Eastern time, and obviously our Friday morning market wrap up, 11 a.m. Eastern Standard Time. Got the new indicator. Probably going to publish it either. I mean, I'm pretty much done with it. Been messing around with a couple things, and I think I got it where I want it. Going to go ahead and slap that bad boy out there for the group members. Probably this week, I guess. And what else? I think that's all the excitement. So I'll catch you guys on Wednesday. Appreciate everybody tuning in. Hopefully everybody had a great weekend. Some pretty fun fights as well if you're into the UFC. I definitely enjoyed myself. And yeah, we'll go ahead and wrap it up there. Appreciate everybody tuning in today. Everybody have a great week. Make sure you are, practicing the key principles of trading and investing. Obviously, risk reward, probability of success, aka trading with the trend. Position sizing, very, very important. And, those are the pinnacles. Keep those up. Stick to the guns. And, probability is on your side. So. And obviously, as always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader. And I'm out of here. Everybody have a great night. Peace out.